All right. What is up, everyone? And welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel where the Santiment team and community members will discuss recent crypto market events from a fundamental perspective. We're going to talk about interesting market insights that we've kind of discovered over the week using Sentiment's metrics and indicators. So, if you haven't heard about Sentiment before or used our metrics and tools, basically what we do is we develop tools and custom metrics, indicators, and strategies using on chain, social media, and development data. We do this to help you better understand the crypto market and the behavior of all of its participants and major stakeholders like whales, miners, network participants, the crowd in general, and so forth. So I suggest checking out sentiment.net after or during the call and joining our Discord if you want to be a part of these discussions on a daily basis. We talk about the market pretty much every day in our trading channels. So if you like what you hear today, the link to our Discord will be in the description of this video, so check that out as well. So as usual, I'm going to start by giving Brian the floor. And Brian, if you want to share what you've been finding in your templates recently, the floor is yours.
Okay. What's going on, everyone? So, as I usually do, I'm going to start off with a quick NVT update. Looking at Bitcoin here, we are here in the last bar in February, where we are in semi-bullish territory. The way this template works, if you are below or above the trend lines here, you see in green, yellow, blue, and red, that is what your signal is, depending on bearish to bullish, 5 different degrees. Right now we are in the semi-bullish territory, meaning we're under 3 of those 4 trend lines. As we can look at the last 10 days here, yesterday was another good day for token circulation. We had plenty of movement in Bitcoin, and this is looking like it's continuing to give plenty of traction to the rest of crypto, because as most of you know, most of crypto lives and dies based on how healthy Bitcoin's network is at any given moment. The day before was even better than yesterday. Basically, the lower you go, the better. So 1 day's yesterday, 2 days, 2 days ago, etc. These are all below the trend line here with these hash marks. 4 to 10 days out was a little more on the neutral end, but we're continuing to just see slightly healthier and healthier token circulation days, which is great. If I move over to Ethereum here, we're actually seeing an even better outlook, also in semi-bullish territory, and the hash marks are a little bit lower on the scale compared to these 4 trend lines up here. So basically, if you see a correction right now and you're continuing to see healthy network token circulation, it's generally pretty safe to buy the dip, because we're seeing a divergence anytime Ethereum drops right now. It was at 280 a few days ago. Now it's down to 260-ish. I'm not going to tell you guys what to do, but in my opinion, we can't retrace too much as long as we're continuing to see extremely good token circulation like we are here. I also wanted to highlight one other project on this template, and that is Kyber Network. Kyber Network, as many of you know, it has kind of been on a run over the last month or so, and even during this retrace, it's kind of maintained its legs. Yesterday was the first day that it kind of dropped off a bit. It had about a 15% correction, but it quickly got scooped back up. And you can see here that it's having its all-time best NVT other than March 2019, when the price started to take off. The last couple days in particular are looking very strong for token circulation, and we're looking healthy and in the extreme bullish territory right now. So this is a token I wanted to highlight. If you guys are interested in an altcoin and taking a chance, this might be one that's showing good fundamentals right now. Any thoughts on NVT or any other projects you'd like to see?
One question,
Sure.
Brian. On this Kyber network chart, which line is the price? It's not so obvious.
Yeah, the price is always these big green, white, and red thick lines. The red is always the low of the month, white is the average, and the green is the high. So if you want to see the low, it's 28 cents. The high is actually not being shown right now because it's off scale. But yeah, it's the red, white, and green here.
So wait, it doesn't show the current exact price. Because it's an aggregation for months. Yeah. Okay.
Correct. It's
Okay.
the whole point is that it's using an average of days to give you a better indication of what the long term token circulation is. But current price, if we go down, is the close was 55 cents, and right now we're at 57 cents. Yeah, so it's already started to tick back up, and it's actually an all-time high right now.
Yeah, it's funny that you used Kyber.
This is sequence, okay.
Yeah. Funny that you used Kyber because I was also looking at it because Kyber it's been one of the top ERC20 coins for the past week just in terms of price gain. And it's like we'll look at it a bit later as well in more details. It seems to have strong fundamentals still, like there hasn't been too much of a drop off of, although there are a few kind of red flags like the fact that its MVRV is almost near its all-time high. So there's some things to be concerned about, but in general, it looks like KNC has been on a tear, and yeah, the NVT kind of supports the theory that it can go higher, right?
Right. It's really just showing that the amount of unique tokens out there that are being circulated right now are at a pretty all-time high level, and that is one of the most healthy things you can hope for if you're hoping that the prices are going to go higher.
And so for Bitcoin specifically, we're seeing a green candle or green pillar, even though the price is dipped by about 6% today. So
Correct.
would that mean that the token circulation has either stayed the same level as before, or it's even kind of, picked up the pace even more?
Yeah, it's mostly maintained the same level, if not picked up slightly, because as we can look, for the average of the last 4 to 10 days out was up in the neutral territory below just this green trend line, but above these other two. But since that time, over the last 3 days, it's really stayed, it's kind of picked up. And this would be considered a minor divergence that's going on right now, because we're seeing the price actually retrace slightly, but the token circulation is actually picking up. And this is generally a prime time to dip by, but obviously that's not always going to be the case.
Right.
So you got to proceed with caution. But if you do believe in this kind of model, which I do, this is the kind of setup that you're looking for when you want to confidently buy low. And obviously you can get trapped, and token circulation can fall off because there's too much FUD going on, or there's a little too much fear in the market. But I don't think that's one of these times. And probably later in this call, we'll talk more about the sentiment of the markets to back that up.
Yeah, and also it's the fact that I've been looking at Bitcoin's daily active addresses as well. It hasn't been really dipping in any sort of fashion. Like it's still pretty much mirroring its weekly activities. So yes, there are some ebbs and flows, but they are within like, not predicted models, but just general weekly patterns. So I would say that if the Bitcoin continues to dip a bit over the next couple of days, and the amount of daily active addresses and just general network activity continues to at least plateau around these levels, we might even start seeing new signals fire up on our price DAA divergence templates, basically saying that daily active addresses are showing a strong trend, even though the price is declining, which should be a bullish indicator as well. So definitely something to keep in mind for the next couple of days is what the overall activity on chain is looking like for Bitcoin, both in terms of just the amount of addresses that are interacting with the coin, meaning buying or selling BTC, sending or receiving, which you can see on our daily active addresses charts, as well as looking at the amount of value actually being transferred on the network, which you can see basically looking at the token circulation as well as transaction volume, both of those metrics available on sentiment.net. Cool. If you want to go over the next template, feel free.
Yeah. I merged over to my new daily active addresses and network growth model as you were discussing the DAA of Bitcoin lately. And I wanted to actually show the perspective of what Bitcoin's daily active addresses are looking like in comparison to some of the other ERC20s and a few other tokens out there that I track. So Bitcoin, it's a little small right now. Maybe I can try to bump it up a tiny bit to see these lines better. Bitcoin is in dark blue here. So it's right here on the daily active addresses chart. Over the past 90 days, Bitcoin's daily active addresses have moved up an aggregate of 17.2%. In comparison, we can look at, let me see here if I can highlight. Maybe not. There we go. Yeah, it's Kyber here. So Kyber is leading the way up in light blue. And then there's other ones like Decentraland, which has dropped off a bit, Engine. These are all starting to retrace a bit with their daily active addresses, meaning the DAAs that were created aren't suddenly going away. It just means the rate in which they're being created is starting to descend. Whereas something like Kyber, which backs up what we just looked at with NBT, seems to continue just getting more and more addresses, which is helping its ability to increase its token circulation more and more. But anyways, Bitcoin has been falling down since its time. Bitcoin was up at the top right around February 14th, and it's slowly descending over to yesterday, where it was back down slightly, but it's still up pretty well. Bitcoin is mostly staying flat, and obviously you'll see much more fluctuation in altcoins. And what this basically does is anytime daily active addresses goes up, say 3%, it adds 3% to that graph. Anytime it goes back down the next day 3%, it'll retract back 3%. And this basically aggregates over time, over the 90-day span, which projects are creating the most daily active addresses at the highest rate and directly compares them to each other. So you can see their perspective in the markets. So I find this really cool, and this is available to people on Sandbase Pro. If they're a pro member, they'll be able to request this chart from me.
So what's
soon we'll have it.
Sorry, what's the percentage change for KNC?
KNC right now over the last 90 days.
Oh, okay. 127%.
It's up around 127. It might actually be a little higher, but this, for whatever reason, this point isn't highlighting right now. Yeah. So it's up in the high 120s over the past 90 days. It's really been churning along.
Yeah, so obviously this is relative value. So even though you see Bitcoin in what, like 7% spike in terms of daily active addresses, this is still tens to hundreds of thousands of addresses interacting with the network on a daily basis, whereas 127% for KNC might as well be maybe 1,000 or 2,000 addresses at most. But yeah, still, even the smaller absolute values for a coin like KNC can definitely make some waves within its its price action.
Yeah, and we can actually look at it here on sand data really quick, and I'll show you the last 7. I'll go a little longer. We'll say last 90 days to match the graph we just looked at, and you can really see it reflected here, especially since Valentine's Day, where it dropped off slightly, and then it just soared back up, and it's now at all-time high levels for daily active addresses. So you can really see the impact of what network growth can do for the price and how it's mirrored.
Yep.
Cool. Let's see. One other thing I wanted to show was mean age. Yeah, mean age looks good here. So I'm highlighting 10 different projects that I look at when I'm doing some mean age comparison, and you can switch these often in the model. You can type in any type of project, and it'll switch up what's being shown here on the comparison graph. Right now, I'm highlighting 4 of them. those being Ripple, Ren, Maker, and Augur. And the reason they're highlighted is because they've all had notable dips in their actual mean age, meaning the amount of time that they've spent in their current addresses, the tokens. So what we've seen here in early February, we saw a huge drop in Ripple's mean age, which is bullish. We look for these drops because it's showing that the old stagnant tokens are moving to new addresses. And it's basically risen slightly and then fallen back down. And I can actually measure that on this model against Ripple's price if I type it in here. And you can see how this large dip here in Ripple allowed Ripple's price to really surge over the next 2 weeks to its not all-time high, but high for the last 90 days. And then it slowly descended again. And right now, it's having another drop, but the price isn't going up, probably because it's pegged to Bitcoin's value, which has dipped a little bit. So if you're looking for an altcoin that might recover nicely as Bitcoin starts to churn back up, Ripple looks like it's having a lot of stagnant coins move to new addresses, which is generally a good sign for the long term. Another one would be Augur here. We saw a recent dip just about a week ago. And if I measure that against Augur's price, we see kind of the same thing. It had a surge right when it first started, but I think because Bitcoin's price fell, so did Augur, but not very much compared to a lot of altcoins. A lot of alts basically did this and fell down to this range. Augur is still maintaining where it was in early February, and when Bitcoin recovers a little bit, this is another one, because of the big drop in the mean age, that we should see a nice recovery. Ren as well, just had a recent drop a couple days ago. If I go here, measure the price, look at this big spike that just happened on the 19th to the 20th, right after the mean age dip happened. So you can really see some correlation here. And then finally, Maker. Maker may still be stagnant. So this is one that we're kind of waiting and seeing on, but it's had a lot of drops. So I wanted to at least highlight it really quickly on this comparison graph. These drops down here really were significant, and it's one of the lowest. If you can see how it's outlined against all the other grays here, it's the second lowest on this graph, meaning it's showing a lot of new stagnant coins moving to new wallets. The price is consistently moving up, and it didn't really have a drop at all because of that. It's actually at a 90-day high right now, and I think the mean age is a good indication of why that's been happening. So this is another tool that I recommend for our Sandbase Pro users, and it really gives a nice leading foreshadow into what these projects might be doing in the upcoming future. And of course, just like I just did, you're able to type in exactly what you want to put in for the price, and then which projects you'd like to compare them to in this data tab.
Yeah, so just a few caveats in terms of the deciphering and putting context into these dips for mean age. Like if you look at we have the mean age charts for pretty much all of the coins in our database available on SandData. So if you look at the mean age charts for Bitcoin, you can see that these dips in the average age of coins kind of correlate, like massive dips will usually signify a forming top eventually. So it's not necessarily that the dips in a maximal mean age are going to always be bullish.
Right.
It seems like, at least like if we look at the 10-year scale, I think we can see that the dips in maximal mean age kind of start happening somewhere halfway through the rally, and then as the amount of, or as the age of the coins becomes, so to speak, younger over time, at some point it basically peaks and signals the trend shift as well. So this is what we see, like,
Right.
for example, right there, right? So you see this massive dip in maximal mean age right around maybe the middle point in the rally, and then the very bottom of the maximal mean age correlates perfectly with the Bitcoin top as well.
Yep. Yeah, that's exactly right. And this is obviously a very good measure of what the tokens of any network are doing and how much they're moving around. And as many of you are learning, that is a key sign that prices are able to move higher. So that's why maximal mean age is one of our key leading indicators for those that are asking about them.
Right. So just from a behavioral standpoint, what this means, what maximal mean age is trying to kind of contextualize on a chart is when coins that have not moved for a long time start sort of uh, on average moving again, right? I mean, I think Tanko is on a call, so Tanko is the person that made this metric to begin with, created it. So Tanko can explain the behavioral aspect of this chart better than I can. So Tanko, if you want to shortly kind of go over how you see this chart and why you think it's what you think it shows in terms of network behavior. Feel free, please.
Sure. Hi, everyone. Yeah, so the age well tells us how long a certain coin has stayed in their address, and for the what's called here stack mean age, we take all coins. For each coin, we look what is its age, how long it has stayed in its address, and then we take the average over all coins. So how long has the average coin stayed in its address? That's the what the graph means. For the mean dollar age, instead we look at the dollars that were invested in purchasing those coins. So we look at each coin and we look at the its price when it moved into its current address. And so we see each of those invested dollars, how long they have stayed without moving. And while the stack mean age gives us the age of the average coin, so the mean dollar age gives us the age of the average invested dollar into this into the network. And what you see here on this graph is that if at some points the age goes up and at some points the average age goes down. So when the age goes up, this means that in a way people are just hodling. So every day the age increases. When the age starts to go down, well, this means that the activity has increased. Old coins that have not moved for a long time, they have started moving again. And this corresponds to the age going down. And you see that age going down coincides with bull market. So it can also give us some kind of a limit how far the bull market can go. You can look at especially at the mean dollar age for Bitcoin. It's really remarkable. If you look at all the previous bull markets, it dropped significantly. For example, well, the first one was about 2011. It dropped from, what is it, like 7 weeks on average, and the minimum was 1 week. So quite a lot. And the same thing happened on all the other bull markets for the dollar age. So after that, it dropped from 1 year to 1.2 years to, 30 weeks. Yeah, it's 30 weeks to something like 7 weeks or 8 weeks. In 2018, again, something like this happened. It was like about more than a year, and then it dropped to only 9 weeks. So pretty significant. And so if you see such a significant drop, then this is a good indication that, well, probably it's not going to continue going down any further. So for the next big bubble, for the next big bull market, if you look at mean age, that might help you know when to sell, when the top will happen. And now we see for Bitcoin that the mean age has since recently started to go down, which means activity on the chain has increased. Old coins are moving to the market. Maybe some people want to sell. We'll see what happens in future.
Yeah, we look for these turning points here, and even at the very beginning of these drops, you tend to see Bitcoin start to rise. So yes, this could possibly be a little fake out right here that's going on, or it might be the beginning of one of these. You never know. But even a small little drop like this, I've noticed Bitcoin's price tends to correlate with it soon afterwards. So it's a really nice foreshadow for the future, in my opinion.
Yep. Cool. Thanks for explaining, Sanko. Brian, if you have something else to show, otherwise I'll give it to Max to kind of give us his addendum on the last week's analysis and spotting tops.
Yeah, I'll stop here and send it over to Max. Thanks, guys.
All right. Thanks a lot for the exposition, Brian. And now I'll hand it over to the Santiment founder, Maxim Balashevich, who has something to share today about how to use our platform to spot tops in Ethereum. Pretty valuable information to have if you have it, and we think we do. So Max, if you want to share your screen and kind of tell us what you recently wrote about and give us the breakdown of different indicators that you've used to spot tops in Ethereum, go ahead.
Yeah, hi everyone. So it's well, as you've seen, there are a lot of different approaches, and what we've discussed right before mean age, it shows that we are not on the ultimate top. Yeah. So what I will be showing now, don't pull out your guns and start selling everything in crypto. It's more like sharing how you prepare yourself. Yeah. In a different, from different perspective, seeing how tops are formed. And it's not only on Ethereum, it's for any single coin. There's this matrix which will be like I'll show on the screen. They're given in an example of Ethereum, and we have most of them for all ERC20 tokens. Yeah, for Bitcoin, it's a bit different set, and we don't have too many metrics for all coins. But for the top, I think for top 50, at least we have exchange volume and social ones, which are, in my opinion, already strong enough indicator to know what's going on. So as on the screen, I think you will share later on, you can put the link in the video description, Dino report which we wrote together.
Yes, it's already in there. So guys, if you want to kind of follow along or read afterwards, there's a link in the description of this video pointing to the analysis that Max made yesterday on this very topic, just so you can kind of see it in written form as well.
Yeah. So what we've been noticing time and time again that the top building of top has specific patterns or way how the data reveals itself, and these patterns are nicely explainable from point of how crowd behaves, and they can be understood relatively easily. And if practice over a short time, you will see much more from the market, which you, I think, could have seen like even 2 years ago, because it didn't exist. Now we have it. So green is a price, and then in different colors. Here's a gray, here's blue, here's again bright blue, and this orange. It's different metrics. So price will be for Ethereum, and when we looked on a long-term scale, it's like 1 year chart from the last year when we built 360, I think it was at 336 for Ethereum. There is a specific pattern on the last top, really ultimate top. You will see exhaustion of the crowd, exhaustion of the buying power. Because you cannot like push price forever. It never goes from 10 to 1,000 without stops. There are stops. Yeah. And please take into account when we're discussing these stops, it can be preliminary tops, which also like a new entry points for those who missed the trend. Yeah. So it's not only used to identify the toes, but also if you see something that it actually does not tell me that it's the ultimate top, you can use it as an entry point. So it's a two-side coin. So in 2019, in the end of June, what we have already before the ultimate top, the pattern was like some kind of exhaustion. Yeah, we build the top, and the next top came with a lower volume. Yeah, and it's trading volume. Yeah, we take it from exchange, aggregate from all exchanges, and also came this last top on a lower social volume. And I will talk about this indicator later. And but we had spike in the rectifier, so speculators jumped on board yet. So if we see so strong spike, it sometimes, in this case, it worked. Allows we built one more top, but while building this last top, so this on-chain activity or on-chain volume, that started diverging quite significantly. Just from value of 440 daily active addresses, and on the very top we had only 330, so 100,000 addresses, 100,000 less addresses on the Ethereum network were participating in this pump or hype. Yeah, and the same we like seen on a social volume. Yeah, it tried to break the new highs, but did not. Here we have 5,300 mentions across all social channels that you track. On the top, it was a bit less than 4,000. Yeah. So here again, quite significant change, 1,000 less. And when price started crashing, you see like we didn't make it, did not break it. Exchange volume, I kind of get the same, but there is no significant push beyond. So that's it. And when the price goes down, and of course. Every time when price go down, this indicators goes, but you look like, okay, there was a new top. Did it break the key values? It did not. It was a significant top from 270 to 340 at the time. I remember we were all hyped. So this is a setup. When you see the price keep pushing, but there is no follow-up in the volumes, no in trading volumes or talks, excitement of the crowd, or on chain volumes. So this is the moment when you see on so big scale, let's say like a 1 year chart, you could consider, oh, wow, getting dangerous, maybe I should leave it. And normally you are given a chance here. Price will crash and then try to recover. And when you, at this point of time, you see the picture on the left, well, good if you can have access to such metrics, you could make a much better informed decisions what you do next. Do you speculate to push one further, or you say, okay, risks are high, I'd rather cut half or exit completely my positions. And by the way, yeah, so that was about how to apply this volume theory to managing your portfolio, which is nothing else like understanding how the crowd, the major participants, how they actively interact with the network. So this is was about volumes. Now on this chart, as you see, it's a bit different one. It's a percentage, how we call it, in top holdings total. Well, it can be tricky. What we mean by that, from all addresses, the ones which identify as top holders, how much of the total supply they're holding. Why do we do it? It's the same, similar behavior, and well, it's the same behavior analysis, but now applied to specific knowledge we know about the crypto market. We all know that the real driving force for the price, the whales, It's not us small fish. We cannot really move the market. It's the whales. Yeah, if they decide or if they agree that it's a good time and they start accumulating and buying, the price moves. When they start doing it, when they stop doing it, and you will see here, yeah, they stop doing it, price can still push because then the crowd is in. It typically happens in the middle of the trend, yeah, for some time. But if they stop accumulating and don't decrease their position, price cannot push anymore. And here on the side, starting from somewhere like end of summer last year, you see they started increasing their position again. Yeah, here's a draw, but then increasing, and it happens before price increase. Yeah, they accumulate. It's smart money. This behavior of smart money. They buy before price increase and they sell before price stops. That's why they're smart. That's why they grow their typically their holdings. And here, what you can see is that, as I say, even already October, November, they started accumulating. Price still drop. They never panicked. They keep accumulating, buying more, and through whole this last increase from 120, I think, 120 to last 260, 250. They've been increasing their holdings. And now they're decreasing it, so we need to pay attention to these metrics. Once again, the link to this setup, so you can click and just get on your pages, will be in our YouTube video. But interesting, if we look now into details, what's going on now. Yeah? Remember that on 1 year, look so dangerous yet. Yeah? Here, a little bit some signs, but as you see here, when they start decreasing, we can still push much higher. Yeah? Right here, we can still go to 400, 500, 600 in Ethereum. Here looks not so bad, but here again, we did have it, but then we pushed higher. So it's a kind of mixed situation on the long term. Yeah, I would not say that it's extremely bearish. When you switch to 3 months, this is where you can observe or decide for your position, entering or not entering. And yeah, for the last top, we did see this divergence on a smaller scale. That's why we had this dump from 280 all the way to 245, 250. It's not a big one, but the divergence was visible. Even exchange volumes, they started to deviate. Social volume did spike a little bit, but on-chain volumes, they deviated again quite heavily. The same behavior on a smaller scale. So that's why there is a chance that this top we've seen here, smaller ones, to decide what the market will move. We just need to keep attention to this setup over the next 3 to 5 days. And yeah, I think maybe that's enough not to overload with too much information. This setup works quite nicely for Ethereum. With some minor changes, it can still be applied to most of the ERC20 tokens.
Yeah. So what I personally love about this specific sort of analysis is that you basically use 3 completely different sources of data. So usually, you know, when people say volume, they usually mean trading volume or volume based on exchanges, right? On just across all exchanges, trading volume. But what we do instead is, other than just relying on price and exchange-based data, we also pull in different sources of data on the same chart. So other than looking at trading volume on Santiment, you can look at the social volume, which means the total amount of mentions of the coin, in this case Ethereum, across crypto social media. This is the custom data set that we have developed. So it's only available on Santiment, but it is also a kind of volume that obviously has very interesting, you know, patterns that correlate with trading volume very often. So it's one of the ways that you can kind of validate your theory on where we are in the market. And then finally, the last sort of volume that you use is on-chain volume, right? So expressed via daily active addresses, or the complete or total amount of addresses that are either sending or receiving, in this case Ethereum, on a daily basis. It's one of the ways that you can kind of quantify or define on-chain volume as well. So we are using 3 different volumes from 3 different sources here: price or exchange base data, social data, and on-chain data. And when you see these sort of, same patterns materializing and manifesting itself on all three of the different sources, I think it's a much more powerful sort of indicator than only focusing on any one of them in particular, right?
Yeah, that's the point. Yeah. And as I remember, you remember, Dino was striving to establish this. Again, I forgot this word. You know what I mean?
Holistic approach.
Yes. Yeah. Yes. Right. And holistic in a way that if you want to understand the forest, you do look into every specific tree, but in this tree, like different kind of volumes. But you know that we're talking about the forest. We're talking about behavior of the market participants. Yeah, they do over and over the same thing in every bottom, every middle of trend, at the end of trend. It's just human nature. So in the forest, in our way, it's behavior of the humans, participants of the market.
Yeah.
And it should be holistic. It should be holistic. Yeah. Identify every small piece, but don't forget what are you actually looking for. Yeah. And we can spend a lot of time, for instance, like the last bottom was formed. It's also a very amazing example of panic and like a really typical what you would be looking for. One of the two typical patterns when the bottom is formed. Yeah. But just bringing all different metrics in one place, showing them in a unified way, I should say to Valentin Hiznakov, and Yura is not here, but it's a really great work. Now, analysis of the market became much, much more easier than before.
Yeah, and also it's like these three charts, they also kind of show you the behavior of different market participants and stakeholders as well. Like if you only look at social or on trading volume, you're basically looking at, okay, what is the, let's say, what are the speculators doing, right? There's no other sort of stakeholder cohort or structure that you can kind of take away from trading volume. Whereas when you look at social volume and on-chain volume as well, sure, it's made up of some speculators, but it's also like when you look at social volume, it basically tells you, all right, what is the general crypto community and the crowd, the mainstream sort of crypto crowd, what is their amount of excitement and interest in any specific coin at any given time. When you look at on-chain data and things like daily active addresses, you're not only looking at the speculative activity, you're looking at the overall activity on the network. So basically, how is the network behaving as a whole, including both speculators and people that are maybe using Ethereum for various utilitarian purposes as well. So that's why I think it's also important to look at various angles, because you're basically trying to break down the behavior and add context to behavior of more than one major participants of the market. So really, really cool stuff. And guys, as I mentioned, if you kind of want to see this in article form as well, there's a link to this article in the description of this video, and we'll share it on Twitter as well after the call is done. But once again, thanks for sharing, Maxim.
Yeah, you're welcome.
Okay.
I'm giving up my screen.
Okay, I'll start presenting mine. We got about 10 minutes left, so I actually wanted to show some of the very similar patterns to these on a different coin, just to kind of see one, in case of Chainlink specifically, I think there has been quite a similar sort of behavior happening recently. Am I presenting? I am. Very similar behavior happening, just what you described over the last maybe week or so on Chainlink as well. But while we're still on the topic of Ethereum, just quickly, I wanted to get your Maxim's thoughts on what's been going on with the miners. Because last week, for those of you who were listening last week, I mentioned that we saw this sort of small miner drop off or sell off.
Can you increase? Can you increase?
Like
wow, that looks good.
Yeah, you want to increase the
this looks time frame and also chart.
Increase the chart. Yeah. So this is the lowest cumulative balance. So we're looking at the Ethereum miners here. Basically, we're looking at the balance of across all Ethereum mining pools. In this case, over the last 6 months. So this is the lowest that they've had their balances over the last 6 months, 1.625 million. It dropped from 1.664 million just maybe a week and a half ago. So there's been quite some sell-off going into this rally as well. So if you look at the like 2-year view, it doesn't look as dramatic as when you zoom in, but it's still kind of, you can see this sort of downtrend happening over the last few weeks or so. So last time you said that you think this is bullish.
It looks bullish.
Okay. You still think so?
Yeah, I need to ask our devs to bring this metric on Sundays maybe. Otherwise, I forgot to check it on Sun data. Like you need to switch between different places. Yes, by all means, change to 4 years just to see. I will show you what I want to say.
Mm-hmm.
Actually, I was waiting for this signal for a long time.
Let me see.
I think here something went wrong. It was the DAO. You see, miners, it's dedicated and clearly specified group of people. Yeah,
mm-hmm.
It's not a crowd, but still a specific group of people. When a group of people exercise one specific behavior, it can be understood and applied to what it means. Now, the normal humans, well, they're more advanced maybe in some technical sense, but the key behavior after stagnation for long enough time and after they get to the feeling of doubts or like I'm tired, I want to give up on all the things, you will see a drop of their balances. And this is exactly one of the best times when you should buy into this weakness, because emotional weakness of some specific groups, it's always a good sign for the growing market. It's contradictory. It may be not so obvious, but if you analyze the market long enough, markets are growing always on worries. I'm not sure it can grow. It's always the way how market grows. And they stop growing and everything thinks, it can grow forever. Everything's good, no problems anymore. We'll conquer the world. This way it stops growing.
Mm-hmm.
And you can see it in this particular case. When they're selling, why is they selling? The key question, why is they selling? They don't believe it will be much higher.
Yeah.
If they know the price of Ethereum will be like 340 or 50 next month, why should I say? Of course I will keep. They don't believe in it anymore. So for me, it's actually now I'm thinking I need to change again to quite bullish stance, despite what I said in because it's a quite strong signal. Yeah. Well, we can observe it for wait a second. We can observe it for 3-5 more days, but that's quite important.
Can this be somehow connected to moving to Ethereum 2.0? I mean, miners would be obsolete when Ethereum moves to proof of stake. So maybe
in
It's
preparation.
irrelevant. Well, it's irrelevant. It's even if they would be so sure that Ethereum will go to 2.0, it means price will be 1,000. Why should I sell? Here we track only they move out their holdings. They dump it. I will never dump my holding if I'm sure it will double.
So basically, Max, what you're saying is this sort of negative sentiment among Ethereum miners you think is a pretty bullish indicator and a sign that Ethereum can grow larger because there's enough FUD in the markets to kind of pump it a bit more.
To my desire, it's not enough. But this indicator is good. Well, enough. Enough. We know what it means. It means like Tour, whatever his name, Tour. This guy will come out again and say Ethereum is bullshit. This is a good sign. He did not post anything like this lately, or someone else, or CoinDesk will write an article how terrible Ethereum because DeFi doesn't work. Something that will be like really like I will not consider even anymore a long minute anymore. We don't have so strong, but at least this part is very good. Yeah.
Okay.
Observe it. Let's check it next week. The best, if price is growing and they keep dumping, well, this is really like you don't consider anymore. Yeah. But what to answer? What you say is correct. Yeah, they might be, let's say, changing the hardware but humans are humans. They're all for profit. If really, in the summer, I think June or July, Ethereum 2.0 will come. It means price will skyrocket. I will never sell it. I will wait. I will sell it more expensive because I've been suffering so long time mining this Ethereum.
Yeah, possible.
Mm.
Well, if we consider miners to be one of the whales on the market, then there can also be hedging some of the risk. Like they were like, okay, the price grew like 70%, so let's take some profit.
Yes. Mm-hmm. That's point. Yeah, that's a good point. That's typically we always see that big holders, that's why they're big. They don't need to like do 10 times, 20 times. For them, it's enough. For it did 50, 70%, it's huge money. So they will initially stop a market for some time, but when you see that they're like moving out, it means they feel like it will not grow much more. Yeah, so they feel like it's risky now.
Yeah.
Which is always a sign saying, okay, they feel risky. Why they feel it? They feel insecure. Let me look more carefully into it. Is it really so insecure?
So you're trying to capitalize on their insecurity.
Yeah, you need to be better than at least half of the market. Yeah.
This is true. Yeah. One other kind of major demographic for Ethereum that I wanted to show. I think Max already kind of showed it in Sandbase. Basically, we have this metric in Sandbase. Sandbase is app.santiment.net. It's our front-facing platform where you can see some of the on-chain and social metrics that we've developed. For full access, I also suggest checking out santiment.net/sanddata to get access to all of these, more than 150 different indicators, one of them being this specific chart. So here what we're actually looking at is the top 100 wallets in terms of holding Ethereum, basically both exchanges and non-exchanges, and then you can filter out between those two demographics. So here currently we're looking at only the biggest non-exchange wallets for Ethereum. And over the last just few days, actually, well, over the last 3 or 4 days, they have also kind of been selling off a little bit of their position. So currently we're looking at the view which shows us the percentage of total Ethereum supply that's being held in the top 100 wallets, or in this case, in the top non-exchange wallets among this cohort. And we see that they've gone from holding 24.69, so basically 24.7 almost percent of Ethereum, to now holding 24.37% of Ethereum over the last 4 days. So this feels maybe like a small bump, but that's still like what, 0.4% of all Ethereum in existence. That's not small. So there has been some offloading. And then if we look at the top exchange wallets, we can see a reverse trend. So basically, right over the last few days, we've seen this double actually increase in the amount of Ethereum going to the biggest exchange wallet as well. So it seems like there is, some rising sell pressure coming from big players as well. One of the other ways you can kind of make sure that this is real, one of my favorite dashboards in Sanddata, is here. So here you can look at the top transfers for any of the coins that we currently support in our database. So be it any ERC20 coins, Bitcoin, the Binance coin, XRP, or Ethereum. So if we look at the top Ethereum transfers for the last 7 days, actually I wanted to look at it over the last just like, let's say 2 days. So this is the biggest transfer in the last few days that we have seen for Ethereum, and it is. Oh, let me just disable my my plugin. So it's a guy sending, what is it, like 23 million Ethereum to Poloniex 12 hours ago. So it's a whale kind of deciding that what's done is done, and maybe I want to go ahead and reap some profits. Now, it should be noted that I've taken a look at most of the big transactions over the last 7 days, and this is the biggest one that I've seen of a whale or a non-exchange wallet actually sending money to exchanges. Most of these, for example, are just like one Binance wallet sending money to another Binance wallet. So it's not, I wouldn't necessarily say that I'm seeing this pattern across the board. There are a few whales starting to sell, and like if we look at this address in particular, we can actually look at what its behavior has been over the last, let's say, 6 months holding Ethereum. So on Sandbase, you can go to labs and then click on historical balance. So this is a great tool of ours where you can literally paste any address that you have in terms of Ethereum-based addresses, and you can search for its balance, or you can look at its historical balance for any given coin, plot it against the price of that coin. So this guy, the guy that sent over 23 million dollars of Ethereum to Poloniex just 12 hours ago, this was his behavior over the last 6 months. So he basically got into all of his money here on November 5th and decided to sell right here at the sort of a bottom. He thought, okay, I don't think that we're going to go any further up, so I might as well,
Good.
Yeah.
Actually, if now while you're on the call, if it will be possible to see anything above 5 million transfer, which is 50-70% in money, it's a kind of quite a strong buy signal, because they're mostly right, of course, when the market is like going down for some time, and they say, okay, you can go. Now I'm really scared to lose my profits. I need to fix it. And typically, this is exactly as we all know. If we do it, we do the same. It's like it happens always at the bottom. The market is increasing. So this is really nice. And exactly as you see in the chat, he didn't buy exactly at the bottom, so he didn't feel so relaxed. He has to like take care of this investment, and it's a lot of money. So this behavior is really very nice for, say, now we reach the.
He also holds a bunch of
temporarily bottom. So it's a nice one.
Also holds a bunch of Kick ICO. I don't know how to pronounce this, but basically,
well, maybe he got it as an airdrop.
Could be.
That was an airdrop, I think.
Okay.
Because I couldn't imagine someone having 25 minutes in Ethereum would invest in Kick ICO.
True. So yeah, I just wanted to show you guys, if you like want to actually get super granular into metrics or transfers for any coin in our database, you can do that here. All right, one final thing that I wanted to show. So Max has basically shown us some of the ways that you can use different volumes, so to speak, to figure out where we are in the price action for a specific coin. So Max, I wanted to get your opinion on what Chainlink has been doing recently, because I wrote this article a few days ago about Chainlink, where I basically said I think it's kind of close to the top. Like, I wasn't completely sure, and I think you also commented on it saying, oh, we can actually push a bit more, and you were right, because I wrote about it like here, and I said, I think, keep an eye on it, but in the next few days we might see a correction, and it turned out not to be one. Now, looking at it now, we are seeing these sort of divergences in its both on-chain, and I'll show you in a minute its social metrics as well. So we see that the amount of daily active addresses for Chainlink has peaked here on February 12th, or almost 4.5 thousand addresses interacting with the network. Since then, even though the price has been growing, the amount of activity on the network has been dropping, and now we have only about 2.9K addresses interacting with the coin. Same thing in terms of network growth. Network growth is a metric that shows you only the new addresses that are being created on the network. So the most new addresses in the last 6 months has happened also on February 12th. Since then, it's been in a steady decline. And then we see a bunch of these spikes in terms of token age consumed, basically meaning that coins that have not moved for a long time, in this case Chainlink coins, have started moving again, which can be a general volatility marker. It doesn't necessarily tell you whether we're going up and down, but it's going to tell you that some of the old-time players, maybe long-term hodlers, maybe even people from the ICO days, are starting to move their coins, and that's always an event that you should pay attention to. And then in terms of the actual on-chain transaction volume, so this is the amount of coins that have been included across all of the transactions that happened on the network. This is the transaction volume. And then the token circulation includes only the unique coins that have been included in transactions over the given, on a given day. We also see this sort of forming divergence, where the very top in terms of on-chain activity and the actual value being transmitted on the network happened, what is it, like 7 days ago, 8 days ago? And since then, it's really gone down to almost pre-pump levels, I want to say. So those are some of the sort of divergences that I've seen in Link. And then if we also look at its social volume recently, so basically looking at the amount of mentions of Link on crypto social media over the last, let's say 6 months, or let's say 3 months, just to kind of see it a bit more clearly. There's been this same sort of divergence. So even though the price is charting new high, the hype is starting to die down a bit. So we are seeing slowly these sort of divergences in both on-chain activity and social activity for Link. Now, I don't still
Can you select
what?
Can you select social dominance?
Yep.
Also on Sundays.
Yep. Let's see.
Because for secondary altcoins, I mean, not Ethereum, this is kind of one of also very interesting indicator.
As soon as it loads. Let's see.
And then looks like not so many people using it, so it's not cached. Okay, now.
No, I can't see it yet. I think it's being worked on at the moment. Doesn't show data still.
Okay.
Actually, we can maybe look at it here. Hold on. Let's be a bit more proactive. There should be social dominance in our graphs platform. So looking at Chainlink, for example, over the last, let's say, 6 months, there's a graph here saying relative social dominance. So this is basically, we are plotting the social dominance of Chainlink against the dominance of these big coins, like pretty much the top 7 biggest coins. So let's see where Chainlink fits. So Chainlink is brown, right? So it's the bottom one. Basically, over the last month,
still quite stable.
Yeah, it's been
stable.
pretty stable actually. Like at least in comparison to other big coins, we haven't really seen all too big of a spikes unless we're talking about February 12th. So we see this spike on February 12th, which correlates to this spike on February 12th as well, and all of these like big spikes as well. So this is where I thought, okay, top might be in. But maybe just general market conditions, maybe just the fact that Chainlink has a very active community. There was still room to grow, and Link continues to kind of ebb and flow, but there are new highs that it's been charting over the last week or so. Now, at the same time, I'm still not necessarily sure that it's all bad news for Chainlink, because if we look at least its like exchange-based activity, it's not looking all that bad. So exchange funds flow is a metric that basically shows you how much of a coin has been going in and out of all the centralized exchange wallets that we track. So over the last, and this one showed so the spikes on this graph, the positive spikes mean that more Chainlink has entered exchange wallets than left, and vice versa. So for example, this dip means that more Chainlink has left exchange wallets than entered. So over the last few days, we're seeing like a small spike in the amount of Link going to exchanges, but nothing super spectacular. And if we look at the percentage of Chainlink on exchanges, it's kind of still been going downwards. It went from almost, 9.3% here in October, or actually November, to just 8.5% today. So, and also in terms of the deposit activity, we're not seeing all that much activity for Chainlink on exchanges. So there's not this huge sell pressure being, kind of laid on Chainlinks yet. And also, if we look at Chainlink's whales and what they have been doing, so let's just quickly go over its top holder metrics as well. Looking at Chainlink, top holders. Just to kind of reiterate the point that the whales are still not really dumping. They did a little bit on the 12th, and that's one of the other reasons why I thought, okay, we might be approaching the top. But since then, they've kind of been just accumulating again. Okay, so it seems like I shouldn't change the time frames. Let's see. So non-exchanges, there we go. So the biggest non-exchange wallets for Link, see this? Again, I thought, okay, this was another sort of bearish indicator, bearish sign. Like the biggest whales, after accumulating for almost 6 months, some of them are starting to sell again. But since then, it's pretty much bounced back to the same levels as before. And Chainlink whales are still, accumulating to their delight.
Yeah.
Yeah.
Valentin, go ahead.
Dip here, I can show you on one of the metrics that we're working on right now, that somebody kind of realized $38 million of profit on top of Chainlink.
You want to share a screen?
It's a kind of a approximation, but I mean, it's this metric that we call average network profit loss.
Mm-hmm.
So it's actually a bit different visualization of realized cap, but that's not so important. But it shows, so it assumes that every transfer on the network is some kind of a trade that the two addresses are doing. So it's looking at the price at which the giver of the coins acquired the coins, and what is the current price, and calculates the profit or loss of the trade. So, for example, this transaction that you showed, the Ethereum transaction, somebody acquired Ethereum in November, and it was like $16 million of Ethereum. And now he transferred it to Poloniex, and right now the value of this Ethereum is $24 million. So this address kind of realized an $8 million of profit. And this graph here, it shows you the total profit or loss of the network. And here for Chainlink, you can see that when it hit $4, somebody that acquired Chainlink on a much cheaper price, I guess, transferred it away from his wallet, and this boosted the profit loss to the staggering $38 million.
That's cool. Well, I think you're doing now a cool thing. Yeah.
That's very
it should be part of super premium access. Well, okay, anyway, some data, yeah. It's already premium enough.
If you look at this, for example, for Bitcoin, the same metric, it kind of looks like when the network average is on loss, it's a kind of a good time to buy. And then when the price starts to increase, you can see, certain spikes. Potentially, some participants are realizing their profits. So, but it's still work in progress. It's still not available on our Sunday. I think it will be available next week.
So there's been a similar dip. So the one that I showed on Chainlink, I think you showed one that correlates with that particular dip as well, right? So this smaller one, just more recently, around February 12th?
For Chainlink?
For Chainlink, yeah.
For Chainlink, it's
Oh, it's so that one. Okay. No, yeah, okay.
What you showed is that the whales reduced their holdings.
Yeah. I thought it was a later dip, but that's actually the one that I showed. Very interesting. So 38.1. Mm-hmm.
So my assumption is some whale just realized a couple of millions of profit.
Not bad.
Gosh, we're doing something wrong. Here and there, whales, I see, realize a couple of millions every day. Okay.
Not bad. Okay, very cool. Thanks for sharing, Val. I didn't even know that we have that in development. Well, anyway, guys.
Well, it's in the beta, yeah.
Yeah, it's in beta. Okay, I think that's gonna have to do it for today. We're already 15 minutes over time. So first of all, thank you everyone that shared today, and to all of you listening live or later on when we publish this and upload on our YouTube channel. I suggest if you like what you heard here today to check out santiment.net. We have a bunch of very cool metrics, some of them that are not really available anywhere else because we've been custom building them for the last 2.5 years. And also, if you would like access or a free trial to some of our paywall tools, please let us know and we'll set you up with a 2-week trial as well. Finally, if you would actually like to be a part of one of the next calls, these calls, This Week in Crypto sort of sessions, let us know, join our Discord and tell us what you would like to discuss. And if you have specific metrics and indicators that you would kind of like to go over and see what they are maybe saying for where we are at the market, we'll be happy to oblige. So once again, thank you everyone for listening and watching, and I'll see you all in 7 days.
Yeah, thanks for running. Yeah.
Thank you. Bye.
Thank you.
Thank you. Bye.